Okay, to talk more about the impact of tariffs on India, I'm joined now by Jeremy Zook, Director, Asia Sovereign Ratings at Fitch Ratings. Jeremy, a very good morning to you from where we are, and great to have you on the show. Now, in a recent interview, you talk about the impact of tariffs on the Indian economy, and you look at it at a fairly modest 10 basis points, if I'm not mistaken. Why do you think there won't be that much impact as is being initially penciled in?
Well, so that modest impact is a kind of on the direct impact of those tariffs. Certainly, the impact of tariffs on India's economy will be negative. But if we look at the exposure that India has to U.S. trade, it's only about 2% of GDP. So, the impact on the overall economy will be quite modest through that direct channel. Now, the indirect channel could be more significant, and this is something that we're thinking about in our forecasts. We think that indirect channel could feed through to business confidence. We've seen business investment, especially when it comes to private manufacturing investment. It really hasn't taken off yet, and this is just another big uncertainty, policy uncertainty for private businesses in India to deal with. So we think from that angle, certainly the impact on growth will be more significant than, say, that direct impact. I think also thinking about the medium term, India was hoping to place itself as a destination for China Plus One investment. And if tariffs remain at 50%, that's much higher than we see in ASEAN and other countries. And so taking advantage of that China Plus One strategy will become a bit more difficult over the medium term. All that being said, we don't anticipate that the 50% tariffs will remain in place permanently. We do anticipate that there will be some negotiation down in the level of tariffs, as was discussed earlier. But it is a question of timing, how long these tariffs persist. Both sides do seem to have pretty firm stances. And so, coming to a deal could take some time. I think just one final point on the tariffs, we're watching quite closely what this means for a broader reform effort. We've had the GST reforms being proposed, but we'll be looking to see, what the government advances in terms of its deregulation agenda and some of these bigger factor market reforms that, whether this provides kind of an impetus for the government to move on those areas.
Jeremy, I would actually like to get your opinion on a couple of those things. We've spoken to commentators in the recent past, and they've said that beyond just what's happening on the GST front, the government has ammunition on the fiscal side to support growth if it has to. I wonder what you see in the rest of the financial year. Of course, several unknowns, and let's assume for a bit that this tariff situation doesn't go away in a hurry. So what can India do, and what can the administration do to support growth? Of course, this GST reform is one part of that.
Yeah. So I think on the policy side, our view is that monetary policy will be doing the heavy lifting. We've already seen 100 basis points in rate cuts, and that will continue to feed through to the economy and help support growth going forward in the second half of FY26. We do anticipate one further 25 basis point rate cut. So we think on the monetary policy side, we will see some of that impulse feed through to the economy. Now, on the fiscal side, our view is that the government has shown improving fiscal credibility and a commitment to achieving their fiscal deficit targets. And we still feel that that is the case, even given some of the economic headwinds. So we do anticipate that the government will seek to, reach that 4.4% of GDP deficit target for this year, even accounting for these GST reforms, although we haven't yet incorporated that into our own forecasts. And if there is slippage, it will be only quite modest in nature. And so, that means that we still expect the overall fiscal stance to be somewhat contractionary this year.
Jeremy, I'm just, good morning, but I'm just, for lack of a better word, intrigued about the thoughts on the India's FIS, because I look across the world, right, and what's happening to borrowing costs, what's happening to yields, etc., make India currently seem like a safe haven, if you will. Look at UK, look at what's happening to European gilts, etc. So, what's the slightly medium term view on India, considering that this government has shown the mettle to wanting to stick to fiscal discipline very, very meaningfully and having a hawk's eye on inflation?
Yeah. So, certainly when we look at India's credit profile, and we did 2 weeks ago now or last week, sorry, affirm India's BBB minus rating with a stable outlook. So, we've certainly seen a lot of positive momentum in many of the credit metrics that we look at, particularly when it comes to strong GDP growth, macro stability. There's been a strong policy emphasis on targeting low inflation, bringing down the fiscal deficit. So all of those things have been, giving some positive momentum to the rating. But when you look at the fiscal metrics, those are still structurally quite weak relative to rating peers. So the debt to GDP ratio, despite kind of the improvements that we've seen on fiscal credibility, meeting deficit targets, is still 80%. About 20 percentage points higher than the BBB median. And particularly on the financing costs, while those have come down, certainly for India, the overall interest burden for the government is still about 25% of revenue. And that's quite a significant outlier compared to the BBB median, which is more around 9% at the moment. So, those structural challenges on the fiscal side, this improvement in fiscal credibility should help to alleviate some of those challenges, but the process will be, somewhat gradual on that front. That being said, the strong growth momentum, particularly if macro stability is sustained, will be a positive for the rating going forward.
Right. Jeremy, thanks so much for joining in, for talking about everything that we did speak about, and look forward to the next chat.